UPS, United Parcel Service, is one Warren Buffett stock down 18% that I think you might regret not buying on this dip. I'm going to talk about why I think that's the case in this video, so stay tuned. All right, starting with revenue growth. Look at United Parcel Service UPS revenue growth from 2014 to 2023, growing from a little less than $60 billion all the way up to $100 billion in its most recent annualized update. Now, UPS is likely to remain pressured in the near term because it experienced a huge boom during the pandemic. You see this big jump from 2020 to 2022. Revenue exploded from 75 billion to 100 billion in just 2 years. That was because we're spending a lot more money online, so we're ordering a lot of things online, and that requires a lot of shipping and handling, and that's where UPS thrives. Now, economies are reopening, people are spending more time and money away from home, not buying as many goods online, and so UPS is pressured in the near term. However, however, I will say that longer term, more dollars as a percentage of spending will be shifted to online. In the US right now, we spend about 15% of overall retail spending online. Just 15% of overall retail spending is done online right now in the US. I expect that figure to grow over time. Um, that's not going to grow to 100% shopping online, obviously, but it's certainly going to be higher than 15% over time, right? Shopping online is just so much more convenient than shopping in person. And more, the trend has been moving upward, right? In the near term, that growth has slowed because we're, coming out of the pandemic. We want to get out. We want to spend money at restaurants, theme parks, travel, that kind of thing. And so UPS will be pressured. But the good news is that when there was that boom during the time when we were spending a lot more money online, the entire industry increased prices, right? UPS, FedEx, the US Postal Service, they all increased prices on shipping. All increased prices on shipping, which is good news for UPS in the long run because they're not cutting these prices back down right now, right? So because their costs have increased as well, they've had to pay drivers more, their fuel costs have increased, so they're not going to decrease that. So they've increased their prices, and now as demand is slowing, what FedEx and UPS have done is they've decreased their capacity. They've shrunk, they've stopped hiring as many people, they've grounded some planes and they've parked some trucks and put them out of operations. They've stopped adding new trucks and new planes, and so they've kind of shrunk their supply of the services that they offer to control costs. And so that's going to be a positive on this next thing I note here, which is already moving in the right direction. You look at its operating profit margin over the trailing 12 months. Look at the big increase they experienced here following the surge in revenue after the pandemic. Operating profit margin jumped higher over 12% up to 13.05%, which is it's at near the highest that it's been in the last decade. So its operating profit margins are the highest they've ever been, and they've increased prices, so this is likely to persist. And the industry-wide competitive forces are decreasing, right? FedEx is increasing prices, USPS is increasing prices, FedEx is decreasing supply, UPS is decreasing supply. So all of that points to lessening competitive pressure, which is good news for investors. So investors do have that one major headwind in that consumer demand for online shopping is falling in the near term. But also in the near term, you have that being offset by decreasing competitive pressure, higher prices, and decreasing supply. So you have a little bit of a balance here. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. The final reason why I think you'll regret not buying this Warren Buffett stock on the dip is because of the valuation. UPS is trading at a forward price to earnings ratio of 15.55, which is less than the average stock in the S&P 500 valuation. And looking at UPS's valuation over the last 15 months, it's near the lower end of its forward price to earnings ratio. This ratio incorporates its earnings expectations over the next year. And so following that, and that's when we said that UPS is pressured, right, over the next year as consumers are spending more time and money away from home. As consumers unleash this pent-up demand and they kind of get it out of their system, I suspect that we'll revert to closer to pre-pandemic habits, right? We're not going to be spending as much time in travel and eating out and going to theme parks and all of that because those activities are really, really expensive. It's really expensive, and I'm sure you've noticed if you try to go to a restaurant, if you try to go to a theme park, if you've got a family and you've tried to visit if you've tried to visit Disneyland or Walt Disney World, I'm sure you've noticed how expensive it can be. So after, people get this out of their system, we're going to revert back to pre-pandemic habits. Of course, that's just my estimation and assumption. I don't think this kind of spending will persist because, like I mentioned, it's so expensive. It's not sustainable, and the stimulus checks have long been in the past now, and we're going to run out of all that excess savings that we built up during the pandemic. So, over the next year, UPS will be pressured, to be sure, but that's already incorporated in this valuation, which is a favorable valuation. Following that, UPS's prospects are solid as we spend a greater percentage of our money online because of the increasing convenience, and then they've increased prices, so you're going to get that benefit from higher prices and then higher consumer demand, which is going to be a nice tailwind for UPS. All right, so that's all I've got for this video on why I think this Warren Buffett stock, you might regret not buying it right now on the dip. Thank you so much for watching. Please click on this video that's popping up on your screen right now. I think you're going to enjoy that. Thank you so much for watching. I'll see you over there.